Well, it was a very sharp short covering rally for a second day as far as markets are concerned. But let's get you who are the big voices which will be explaining how the markets could pan from here on. On the show today, Sunil Singhania, head equities of Reliance Mutual Fund, would be joining us on the show, along with Deepan Mehta, who will help us understand from the fundamental side. He's a member of BSE as well as NSE, and on the charts, like always, Ashwini Gujral, fund manager at ashwinigujral.com, would be joining us on the show. Deepan, how did you analyze today's pullback along with yesterday's? Because though the market is coming back in Gutso, volumes are not really supporting the market.
Yeah, that's right. And as you said, short covering may be responsible for it. At the same time, I think bottom fishing also may be having a role to play in it. And I think the players take heart from the fact that despite all the negative news flow which has come through as far as the macro numbers are concerned and auto numbers are concerned, the FIs continue to buy, albeit at smaller smaller volumes than we have seen before. But the net positive figure certainly is a source of comfort. And in any case, the market had corrected significantly right through the month of March. And a little bit of a bounce was to be expected, and what we are seeing is a bit of a relief rally. The important question is whether it's sustainable, and we see buying emerging at higher levels, and that's very difficult to call at this point of time.
Okay, that's the call coming in on the overall fundamentals. But Sunil, wanted to get in your opinion from a broader perspective, because according to you, what do you think would be the crux of the problem of the India story? Is it only the global data points, or would you say that it's also our own macro fundamentals, which of course have been absolutely shaky, so to speak?
See, the last 3-4 years have been very challenging. Obviously the global data points have also been very volatile. At this point of time, they look much more stable, but you keep on getting some challenging news flow, whether it is Greece sometimes, whether it is Cyprus sometimes, and obviously the domestic, the data flow which is coming has been among the worst in the last 7-8 years. So we have car sales negative for the first time in 10 years. We have the PMI being the worst in the last 7-8 years, the current account deficit the worst, and so on and so forth. I think from our perspective, we do feel that there are challenges in all these data points. But the good thing is that there's an acceptance that there is a problem. And once you have an acceptance that there's a problem, the solutions are discussed and the solutions are there on the horizon. So probably we are looking at a stage where we are at the worst as far as news flows is concerned. And at least our belief is that from here on, you'll start to see increasingly some improvement in the news flows. And that is what the markets are also trying to indicate. Despite all these negative news flows, the markets have been hovering more or less within a 2-3% range. And that clearly indicates that even the markets are expecting that the news flow from here on cannot be more negative.
Surely it has been a very range-bound market past couple of days, almost 100-point pullback on the Nifty from very oversold zones. But Deepan, how did you see the movement on ADAG group stocks today, Reliance Communications in particular, because 16% up move in a single day just on the announcement of a deal with RIL. Do you think this move is durable? Because there is a talk of 1,200 crore coming into the company and indication that more transaction could be there in the offing going forward. If not, immediately, do you think a bottom is in place in Reliance Communications now?
Well, I think it's a moving target, and if whatever has been the reason for the stock to spike, in fact, does happen, and there is some kind of infrastructure sharing arrangement, then certainly it would benefit, because clearly, as of now, the infrastructure is underutilized. Having said that, the stock is, of course, quoting below its book value, and therefore does offer some kind of an opportunity for deep value investors. At the same time, it's in desperate need to kind of, clean up its balance sheet and get its operations going on a more profitable basis. So any kind of better utilization would go a long way in improving all its financial ratios. And the stock, considering its valuation in terms of PE, price to book, any form of positive news flow is certainly going to act as a trigger, which is what we saw today. But I think that, within the telecom space, preference should be for the other larger companies. If one looks at telecom per se, although we are not that positive on telecom at this point of time. But my sense is that, Reliance Telecom, given its kind of valuation, parameters, one would say that some kind of a bottom has got formed, and maybe from these levels it could build a little bit.
Just to follow up on RCom, surely it may not be very attractive from the valuation point of view of entire telecom space, but now money coming in. Do you think that there could be a possibility that other ADAG group stocks, which are also ailing from high debt, Reliance Infrastructure for one, could also go ahead, or some expectation may start built in that some deal could be clinched there also, Deepan?
See, it's very difficult to call because these are all event-based, situations, and if certain events do take place and they are able to clean up the balance sheet, then certainly investors will find these companies quite attractive, given the levels which they are quoting at and how much they have corrected and the kind of asset base which they have. The real problem with the ADAG group companies is the fact that they've taken on far too many obligations or projects, or deployed their capital in far too many kind of subsidiaries and projects, and therefore finding it difficult to manage and realize the growth and extract the value from all the investments which they have made. And only if they kind of cut the balance sheet size, cut the debt, and focus on the more profitable businesses and demonstrate to the investors that they are back on the growth path, only then you would see investors coming in even at higher levels. Because end of the day, there are such the kind of corrections which have taken place in the valuation which they are quoting at. It's always easily possible to justify, 5, 10, 15% up move, which we have seen today in Reliance Communication. But whether these can deliver, good returns over the long term and consistently deliver those, outperform the market, that I think is a bit of a question mark, unless the management takes some, very, I would say, decisive steps to kind of get the business in order and get the balance sheet in order.
Sunil, wanted to get in a word on your overall portfolio, which seems to be suggesting simply hiding in global exporters. Now, you own a lot of pharma stocks. You also have a large exposure to IT, which clearly means that as of now, you're slightly complacent or you're not confident of domestic recovery.
See, I think portfolio creation and portfolio juggling is a everyday process for us. And, yes, we are significantly overweight in pharma. We are positive on IT. But that's a reflection of, you can say comparing sectors. So, from our perspective, both these sectors are very decent. Both of them have some good quality names in it. The earnings visibility is much more secure than other sectors. And probably it's a portfolio decision which we keep on taking from time to time. But yes, right now we seem to be a little bit more positive on pharma and IT.
Right. Sunil, pharma stocks have been gaining particularly well in this pullback in the market. Aurobindo, Sun Pharma at a new high. How do you see the earning visibility in this particular sector? Is it healthy enough?
There is decent visibility both in the pharma and the IT space. And in pharma you have the domestic pharma which continues to grow in the teens, and you also have good opportunity from the export front. And a lot of Indian pharma companies have been getting approvals almost on a daily basis. That is helping. There is an increasing sort of market opening up in other parts other than the US, which would be Africa, South America, to some extent Europe, and also Japan. So I think the growth opportunities are manifold. The size of the Indian pharma compared to the global pharma companies is still very, very small. Companies have reached a stage and scale where they have the money power to spend on research, money power to spend on fighting for approvals. So we continue to be positive. And last few months, if you see, most of the companies have surprised on the upside as far as the news flow or the positive news flow on the approvals is concerned. So we continue to be quite optimistic on the growth of the earnings of the pharma sector even from here on.
Well, that thought, Sunil. Deepan, wanted to come to you with respect to the next talking point, which is likely to be the earnings season. Come next Friday, Infy is going to be in focus. From the overall IT pack, is the general consensus that the demand commentary will remain on the positive side, although the near-term stock performance will be range-bound as all of the earnings upgrades will be gradual and through the year?
See, I think it's going to be a very tricky earnings season because per se there's not much improvement which has taken place over the previous quarter, and some of the industries continue to remain challenged as far as the export-oriented businesses are concerned that do not get much benefit of the rupee depreciation also. And specifically coming to IT, it's anyway a quarter which is seasonally weak. So I would say that one should expect results to be quite flat to tepid. And on the whole, I think one should not expect too many surprises on the positive as far as the entire earnings season is concerned. And maybe there could be a few accidents as well. So we are entering the earnings season on a slightly more cautious note and keeping our expectations on the lower side. I think the bigger event again has to be the RBI policy, because the key to this market is when interest rates actually drift further lower from these levels as well, and how the liquidity situation is, which is quite tight at this point of time. So the best trigger for our markets has to come from the RBI and not so much from the earnings season. And of course there's the whole political overhang which can